With our overriding investment philosophy is to identify the best possible companies we can find at the right price. And there's a number of elements to that. The first element is quality fundamental analysis, in-depth fundamental analysis, to identify those companies we see as having high quality attributes and a positive future growth outlook. So that's the first step. The second step is to do valuation analysis, and that's very important because with companies, it's all very well to identify a high quality company, a fundamentally attractive company and an attractive sector, but you don't want to overpay for it. So there's always a combination of both when you're looking at companies. The other part of the process and the philosophy is we genuinely believe that building high conviction portfolios, simply a portfolio of the best companies we can find, is the best way to deliver long-term returns to our investors. The three most important lessons I've learned since we started at SGH can be summarised as people, culture and clients. Looking at the first one, attracting and retaining the best quality people you can have is critical to a company like ours. We are a people business and they are our capital. So that's really important. The second important thing is to create and build a culture, a family-like culture where people genuinely want to come and work with us and want to stay. And that fosters and breeds success, a success that should be celebrated. And that's the sort of culture we're trying to build at SGH. The third is working with like-minded clients that respect you, you respect the clients that are prepared to think outside the square. It's essential to have relationships with clients that really foster success as well. There are many challenges that have changed over time, but the three that I would choose are firstly the change in regulation, the complexity, the increased requirements for compliance. A lot of these things have been necessary. The industry has changed over time. There's more participants. There's been various actions throughout the industry that have led to additional compliance, and it's part of being a participant in the industry. So that's the first thing. The second is the proliferation of low-cost funds. Index funds, exchange-traded funds. These have really changed the landscape for many investors because they can now invest in an index that they choose. I think that's fantastic for many investors. I personally don't invest in them because I believe that with enough work you can actually identify great managers that can add value on top of the index, but they've certainly made the whole industry much more competitive. The third thing is just the increase in cyber risks. This is something that 10 to 20 years ago really wasn't a factor for most companies, and it's not just the financial services industry, it's obviously across all businesses. The increase in cyber theft, cybercrime is something that all businesses have to be very much aware of, and we spend a lot of time as a company trying to assess and identify the risks that come with that. There's been many changes since we started 20 years ago, but I'm going to talk about four of them. The first is technology, obviously, and technology has changed enormously since we started up SGH. Indeed, if we go back to when I started in the industry in the mid-80s, we used to print off portfolios every day, and it took over an hour to print these portfolios on a dot matrix printer, which many of us will remember, but it took several hours to print these portfolios, and nowadays you don't print anything. It's all on a computer screen. The speed of information, the flow of information, and the sheer quantity of information is another huge change in the industry, and suddenly a lot of fundamental analysis is not so much about finding the information, it's all about identifying which information is accurate and which information to rely on. So that's been a huge change as well. The third thing has been the change in transparency and significantly improved governance in the investment markets, across the stock markets and investment management industry and wealth management industry. That's been a hugely positive change. Just the level of disclosure that companies give. When significant things happen to companies, they are now required to come to the market and let the market know, and that's significantly improved the transparency and therefore the trust that people have in the stock market. And finally, the big change has been the proliferation of boutiques. Boutiques, as in small fund managers, when I first started in the industry close to 40 years ago, it was dominated by the giants. AMP and National Mutual were two examples, and really now, and technology has been a big factor in this, companies are able to start up with a much smaller number of people, and so there's a lot more managers out there focusing on very small niches in the market, and that's a real positive for the investment industry as well, as it adds to competition. So they're the four real changes that have been in the market, but some things haven't changed, and it's important to look at those as well. You have always needed really high quality people, and I think that's really important. Secondly, the importance of having the right culture inside the company hasn't changed as well. And thirdly, you've always had to do a really in-depth research into the companies and really drill down to what are the key drivers, of the fundamental drivers of companies, to identify whether they're really worth holding in your portfolio long term. Those things haven't changed. ESG investing, or investing using the principles of environmental, social and governance factors, is really one of the most exciting developments we've seen in investment markets over the past 10 to 15 years. 10 years ago, we incorporated ESG factors into our investment process. And this year, 2021, we became a signatory to the Principles for Responsible Investment set up originally by the United Nations. The great thing about adopting these ESG principles is just seeing the way companies have changed over time, and companies looking after the environment, companies paying their workers properly, looking after their customers, and adopting proper corporate governance principles means that all shareholders, all investors are better off long term. So that's very exciting.